We're going to ask that age-old question: how much dividends can I make by investing $10,000? So put your swim trunks on, because we are about to wade into some serious financial waters. Now, for those of you who just thought, what the heck is a dividend? Let me bring you up to speed. A dividend is a portion of a company's earnings that's distributed to its shareholders. Think of it as a thank you note from the company for believing in their potential. But here's a question: how much thankfulness can you expect from a $10,000 investment? Let's break it down. The answer primarily depends on something called the dividend yield. The dividend yield is essentially the ratio of a company's annual dividend to its current share price. It's usually expressed as a percentage. Let's consider an example. Say you have a company, let's call it Cash Cow Inc., that pays an annual dividend of $1 per share. Now, if the share price of Cash Cow Inc. is $20, the dividend yield would be 5%. $1 divided by $20. So, if you invest your $10,000 in Cash Cow Inc., you would receive about $500 in dividends in a year. Now, that might not sound like you've hit the jackpot, but remember, this is money you are earning passively. You're literally getting paid for holding onto a piece of paper, or well, a digital representation of it. But what if you are a little more adventurous and decide to invest in a high-yield company? Say Risky Biz Ltd. with a 10% dividend yield? Well, then your annual dividends would jump up to a cool $1,000 per year. But hold your horses. Remember the old saying, if it's too good to be true, it probably is. Higher dividends often come with higher risks. Risky Biz Limited might have a high dividend yield because its share price has dropped due to some underlying problems, or maybe it's because they're not reinvesting their profits back into the company. It's like dating someone just because they're good looking without considering if they have a good personality. Now let's throw in a twist. What if, instead of taking your dividends in cash, you decided to reinvest them back into the company? This is known as Dividend Reinvestment Plan, or DRIP. Let's go back to our Cash Cow Inc., for example. If you reinvest your $500 in dividends, you now have $10,500 invested. The next year, you'd receive $525 in dividends. Reinvest those, and the following year, you'd get $551.25 in dividends. This is the snowball effect of compounding, where your dividends earn dividends of their own. A study by Ned Davis Research found that between 1972 and 2018, S&P 500 stocks that didn't pay dividends returned an average of 4.3% per year. But those that paid dividends and were reinvested, they returned an average of 9.2% per year. That's more than double the return. But remember, not all companies are created equal. Some have a history of consistently increasing their dividends over the years, leading to even higher returns for their investors. These companies, known as dividend aristocrats, are like the blue bloods of the dividend world. So back to our main question. How much dividends can you make by investing $10,000? As you probably figured out by now, the answer isn't straightforward. It depends on the dividend yield of the stocks you're investing in, the company's history and financial stability, and whether you choose to reinvest those dividends or take them as cash. But let's not stop at theory. Let's dive into some real-world examples. Ever heard of a small company called Apple? As of the end of 2022, it had a dividend yield of around 0.6%. So if you invested $10,000 in Apple, you'd get $60 annually in dividends. Not exactly retirement money, right? Over the past decade, Apple's dividend has grown by an average of 10% every year. So, while you started with $60 in dividends, by the 10th year, you'd be getting around $155, and that's without counting any reinvestment of your dividends or potential capital gains from the stock price going up. Now let's take a look at a company with a higher dividend yield. AT&T, for example, had a yield of around 7% at the end of 2022. If you invested $10,000 in AT&T, you'd start with $700 in annual dividends. But unlike Apple, AT&T's dividend hasn't grown much over the past decade. So in the end, your dividend earnings would depend not just on the initial yield, but also on the dividend growth rate. That's why it is crucial to look at the whole picture when choosing where to invest. And let's not forget about dividend-focused exchange-traded funds, or ETFs. These funds invest in a broad basket of dividend-paying stocks, giving you a diversification and a steady stream of dividends. The Vanguard High Dividend Yield ETF, ticker VYM, had a yield of around 3% at the end of 2022. A $10,000 investment in this ETF would net $300 in dividend, and since it's an ETF, you're not reliant on a single company's performance. This can be a less risky way to generate dividend income. But regardless of where you invest, remember that dividends are not guaranteed. A company can choose to cut or even eliminate its dividend if it runs into financial trouble. So while dividends can be a nice source of passive income, they should not be your only consideration when investing. There you have it, a deep dive into the world of dividends. How much can you make from a $10,000 investment? Well, it really depends. Depends on the dividend yield, the dividend growth rate, and your choice to reinvest or not, and the inherent risk of the market. But one thing's for sure, with careful planning, a bit of patience, and a sound investment choice or sound investment choices, dividends can serve as a nice icing on your investment cake. So keep on investing, keep on learning, and keep those dividends rolling in. Until next time, stay financially savvy.